In this video, I want to share with you the tools that millionaires and billionaires use to generate a lot of tax-free retirement benefits, a lot of tax-free retirement income. Um, and let's listen to some of the experts that are out there, because a lot of these experts, at Ed Slott, a big CPA in our industry, Tom Hegna, they believe that there's this big retirement savings time bomb that's getting ready to happen. Our national debt's really high. So the government's going to have to find ways to generate revenue. And they're going to go after one of the biggest assets that is out there, which is retirement plans. Use the tax time bomb on your retirement plan. Ed Slott, who's one of the leaders in our industry, one of the things that he says is the single biggest benefit in the income tax code that many people don't look at is the tax exemption for life insurance. Let's recap. Right now, we're in a historically low tax rate environment. Taxes may be significantly higher in the future. And we know there's going to be some changes on the horizon because these incentives, this low tax environment, that's all getting ready to end by the year 2025, at the end of the year 2025. So the question is, what are you doing to move money from that tax me now, later bucket to what we like to call that tax me never bucket? Why would you want to do this? Should you pay tax on your seed or pay tax on the harvest? I think it makes more sense to pay tax on the seed now instead of paying taxes on the harvest and the growth down the road. So to help you get control of your money, maybe we ought to consider a program that's been around for over 100 years. Banks and billionaires use this type of program to generate more tax-free growth and tax-free income. It is called cash value life insurance, and we use quite a bit of this in with a lot of our clients that we work with. It's fair to say that the world has changed. Right now, the computer is the size of a notepad. Cars have changed. Most people have smartphones. In the financial world, could cash value life insurance change? Sure, it can. Using cash value life is a great way to generate tax-free benefits. Banks tell us to put all their money in CDs at incredibly low rates for safety. But do you think these guys are investing in CDs? No. We're advised to invest in mutual funds. And I'm a money manager. I still believe in investing in the market. But do you think all these financial institutions are putting all their assets into mutual funds and then they're crossing their fingers? Absolutely not. You know, big banks, ultra high net worth individuals, and major institutions, they use cash value life insurance. I read an article recently in the Journal of Accountancy, and it basically said 70% of the Fortune 100 companies use these type of programs. Why would banks and ultra high net worth individuals and major institutions invest in these cash value life insurance type of programs? Aren't they doing exactly what Susie and Dave warned them not to do? The truth is, banks look to insurance companies for sound investments. There's a guy out in Nebraska that buys a lot of insurance companies, Warren Buffett, right? He invests in a lot of insurance companies. Why? They are sound investments. Why use cash value insurance? I believe institutions understand how these products benefit them. You can look at the bank books of these companies, Wells Fargo, JP Morgan, Bank of America, PNC, and this is 2013, but it still applies today. They invest in what they call tier one assets, very safe capital investments. And you can see that in the middle column, life insurance represents for Wells Fargo $18.2 billion of that tier one asset. JP Morgan, 10 billion. PNC Bank, 7.4 billion. This is 2013. Do you think they're still doing this today? Absolutely. Former CEOs of these companies, Ken Lewis, Bank of America, he had what's called a supplemental executive retirement plan. $53 million was in this plan. The CEO of AT&T and Coke, he had $40 million in these supplemental executive retirement plans. These are smart people, and smart people are using these tools. Anyone know this guy? He's the football coach of the University of Michigan, Jim Harbaugh. And a big part of his compensation, $2 million to be exact, starting in 2016, they were contributing a significant portion of his salary into a life insurance program. Why are these guys doing this? Why are these smart, highly successful individuals doing this? What most people don't know is that the compensation strategy that was designed to provide Harbaugh this benefit will give him millions of dollars in tax-free cash during retirement. It's one that can be incredibly effective on a smaller scale. Anyone can do it. Are you doing this? We're doing this for our clients. I think it makes sense to look into this. Why are they doing it? Tax-free income, tax-free benefits. Tech billionaire, he buys a $201 million insurance policy. Do you think he needs the money? No, he's not doing it for the money. He's doing it for the tax benefits and the tax free benefits that this program provides. All I'm saying is maybe it makes sense to look at some alternative solutions. When it comes to alternative solutions, we use a structured, optimized life insurance program with a wealth management platform to help our clients generate more tax-free income and tax-free benefits, not only for you, but for your family as well.